Popcons, a number of speakers lined up. One of them speaking at the moment, Jacob Rees-Mogg, and our Beth Rigby is there to cover the main takeaways, but we just wanted to mention that that is ongoing in Westminster. Jacob Rees-Mogg, and we'll be introducing Liz Truss in due course. We'll bring you the headlines from that throughout the day here on Sky News. Now, a Sky News investigation has uncovered the harmful impact of long delays in transferring acutely mentally unwell prisoners to mental health facilities. The government's target is 28 days, but some inmates have said they've waited almost a year to be transferred. It means prisoners with illnesses such as psychosis and schizophrenia are often being left in solitary confinement while their conditions deteriorate. Well, a warning: this report from Alice Porter contains a description of self-harm.
Bryony was just a normal university student, but she developed mental health problems, and in 2017 she was arrested for malicious communication and attempted arson. She had undiagnosed bipolar disorder. Bryony, not her real name, went to prison.
When you're psychotic and depressed, being locked away in a cell is one of the worst things you can do to someone. I started to self-harm because we were allowed razors in our cell. It was basically a way to cope with my surroundings. It was the worst experience of my life.
Self-harm in women's prisons is at record levels. Now a new report reveals the extent that acutely unwell prisoners, both male and female, will go to hurt themselves. In a report exclusively seen by Sky News, His Majesty's Chief Inspector of Prisons says some mentally unwell prisoners are so driven to harming themselves they have removed teeth or maimed themselves to the point of exposing their own intestines, frequently causing life-changing injuries. But prisoners are waiting long periods before they reach hospital. NHS guidelines stipulate mentally unwell prisoners should be transferred within 28 days from that need being identified. But 85% of prisoners are not transferred within that deadline. The average wait was 85 days, with one person waiting over a year.
What we come across is cases where prisoners used in effect as a place of safety. So out in the community there is no provision in place for someone who's very unwell, and therefore sometimes magistrates or judges will send them to prison simply because there's nowhere else for them to go.
Sarah Reid had schizophrenia and was in prison solely for psychiatric reports to be obtained to confirm whether she was fit to stand trial. Her mother says Sarah was kept in isolation, unmedicated. In January 2016, she was found dead.
She'd be looking around and waving her out and saying, "Mum, I need my meds, I can't sleep." She also had these two black eyes that were, when I saw, I found it shocking. She just looked to me like she was suffering. "Please, please get me out of here, Mum." That was the last thing she said to me.
The government says providers in prison have clear processes in place to identify, assess and treat offenders with mental health needs, and NHS England is investing in post-custody care. After 6 months in prison, Bryony was sent to a psychiatric hospital where she finally got a diagnosis of bipolar disorder.
I don't know if getting arrested and getting sent to prison was the right response. It might have been more beneficial if I'd have been taken straight to hospital, and prison just made illness 10 times worse.
Bryony is now back studying at university, but for many of those who remain locked away, it's still a long wait to get the help they need. Alice Porter, Sky News.
Well, if you or anyone you know has been affected by the issues in that story, you can call the Samaritans on 116 123 or email joe@samaritans.org. Well, you're watching Sky News. Up next is Business Live with Ian King. Retail sales disappoint as consumers reined in their spending in January.
The top business stories live from the Sky News City studio. Retail sales growth slowed in January as consumers continue to struggle with the cost of living. Oil giant BP records its second highest profits since 2012. Plus, why the advance of AI might be a powerful tool against cyber attacks. Good morning, this is Business Live with me, Ian King. Retail sales grew at their slowest pace in January for 17 months as consumers continue to struggle with the cost of living. The British Retail Consortium says total retail sales in the UK during January were up 1.2% on the same month last year. That was the slowest rate of growth since August 2022. Over the 3 months to January, food sales were up 6.3% year on year, but non-food sales were down by 1.8%. Well, joining me now is Helen Dickinson, Chief Executive of the BRC. Helen, morning to you. I mean, it looks as though things petered out a bit after the January sales.
They did. I mean, certainly what we saw is the early part of the month started reasonably optimistically as consumers were enticed out with those January sale bargains, but that didn't really hold up as the month progressed. So food did better than many non-food categories, particularly big ticket items, really found the going quite tough. And I think this is a function of the sort of ongoing disposable income economic pressures that households are facing each and every day.
Obviously, we also had some heavy storms and rail strikes during the month. Were they a contributory factor as well, do you think?
They were a contributory factor. Certainly, the weather, the stormy weather impacted clothing sales, and now we've got a really warm spell. So anything that is unseasonal really impacts the clothing sector, particularly because obviously ranges are put in front of us to be sort of timely for what we should be experiencing at a particular point in the year. So we're seeing that continuing into February, firstly with the disruption of January and now with warmer backdrop in February.
Although it's very interesting to note, I thought, Helen, that non-food online sales were even off more sharply than non-food in the stores.
They are. We are seeing, we saw non-food sales overall actually decline during the course of January. That is across all channels. In the context of digital and online, what we're seeing is a bit of a correction, if you like, from the big peak that was reached after COVID. And so while year on year they are falling, online sales, they are still way above what they were in pre-COVID times, and probably around a third. So 35% of non-food sales are now purchased online, and that is about a third higher than it was in 2019.
One thing I thought was quite interesting, looking at individual categories, health and beauty was up during the month. It was the only category apart from food to be up during the month. Was that just down to the January sales?
We've seen health and beauty do really well during the course of most of 2023. And as you say, in these January numbers, I think a lot of people call it the lipstick effect. So when the economic backdrop is difficult, people's disposable incomes are under pressure, then what we all tend to do as consumers is, rather than invest perhaps in something that is a much more expensive purchase for the household, we'll treat ourselves to the little treats. And certainly, whether it's a new lipstick or wherever else it might be, those are the categories that are much easier to fit into the household budget.
Good to see the old lipstick effect still at play. Sorry, Helen, go on.
Yeah, absolutely. And the other thing I was going to sort of highlight is what we're also seeing. I mean, these figures on the face of it in pound value aren't that great in terms of growth, but actually that masks probably a more significant volume decline because we've still got inflation, particularly in food. And I think that the big question about the outlook for us all as consumers is what will happen to inflation over the course of the year, because that will really have an effect on our own personal finances. And there are a number of things that are, we've seen disruption in the Red Sea. We've got a number of sort of government regulatory things coming down the pipeline that could stop inflation falling, which is the trajectory that we're on at the moment. So that is definitely one to watch.
OK, Helen, got to leave it there, I'm afraid. Good to catch up with you this morning. Thank you.
Thank you.
Now, British Patient Capital, a subsidiary of the government-backed British Business Bank, has invested in a new £76 million fund aimed at backing the UK's next generation of tech entrepreneurs. It's been launched by the early-stage tech investor Episode 1 Ventures, which has previously backed the likes of Habu, the e-commerce fulfilment specialist, CarWow, the car marketplace, and Robin AI, the legal AI firm. Well, joining me now is Hector Mason. He's partner at Episode 1 Ventures. Hector, welcome to you. I mean, it sounds as though AI is going to be one of the key areas you're targeting.
Absolutely. Look, AI is a really exciting space for a VC fund like ours. So we're a B2B software fund investing in companies largely based out of the UK at pre-seed and seed stage. So we invest typically 300k to about £3 million in some of the most innovative founders and ambitious founders here in the UK. So for a fund like ours, AI is a huge space, and we actually have 2 AI PhDs on the team. So a natural interest in that space even before the recent boom. We're pretty careful not to lean too much into the hype around generative AI with ChatGPT and all of those new tools. But where companies are building software to help enterprise adoption of AI, or existing software companies are building generative AI into their own software to help improve the service they can offer their customers, we find those sort of areas really interesting.
I mean, obviously, there's a lot of hot money-chasing opportunities in AI-related ventures right now. Are there enough opportunities to go round?
It's a great question, and what we're seeing actually is a huge number of opportunities. I think over the last couple of years, some of the big tech companies that we all know about, and also some of the growth stage startups who grew incredibly fast through boom times, have actually had to start letting go some of their employees. And many of these employees are incredibly ambitious, smart people who have great ideas. And those people make great profiles for us to back. So we're hoping to continue backing those sorts of founders. And in our previous fund, we backed lots of those kinds of people and that meant that we had a almost 75% graduation rate from our portfolio to raising a successful Series A, almost 4 times as much as the average.
What is it that you like about backing companies at the pre-seed and seed stage?
It's a fascinating game. We truly love what we do, and these founders are risking everything to build what they've dreamed about, and they work so hard to make those dreams a reality. And we really get to be at the front line of the creation of those businesses, helping them with the early decisions, the early hires, and their energy, these founders' energy is infectious. So we get so much pleasure from backing them, and we get to see those journeys as they go from fledgling startups to companies with hundreds or thousands of employees.
I think you've backed something like 68 businesses to date. I mean, how many companies would you look at per actual investment?
So we look at thousands of companies a year, and we actually have 2 AI PhDs on the team, and we have an engineer, and we've built a bunch of data-driven tooling and tech tooling that helps us filter many, many thousands of companies down to perhaps the top 50 or 100 each week that we pay more attention to. So there's a huge selection that we have to whittle down to find the 10 or 15 each year that we want to back.
I mean, more broadly, one of the big themes in VC investing last year was that you saw a move away from the focus on growth and more focus on profitability. Do you think that's here to stay?
Yeah, absolutely. I think at the early stage, there's still a very vibrant market, but at the later stages of investment, it's a little bit of a harder market, actually, to raise follow-on funding. So we're absolutely advising companies to be a little bit more cautious around growth, to have an eye on profitability and break-even, which wasn't really flavour of the month in 2021. And I think it's a really good rebalancing of the portfolio to slightly adapt that focus. And I think, yes, it will continue for the foreseeable.
OK, Hector, well, good luck with the new fund. Come back and see us again.
Thanks, Ian.
Some other business news stories for you now. And BP has returned to profit after reporting a huge loss in 2022 related to its exit from Russia. The oil major reported a replacement cost profit, that's the industry's preferred measure, of $16.2 billion for 2023. That was up from a loss of $3.5 billion in 2022 when BP took a charge of $24 billion following its exit from the Russian energy group Rosneft following the invasion of Ukraine. On an underlying basis, replacement cost profit came in at $13.8 billion. That was down from $27.6 billion in 2022, but that was still BP's second best annual profit since 2012. BP also reported better than expected results for the final 3 months of last year and announced plans to increase the pace of its share buybacks. The shares have jumped by as much as 6% this morning. Virgin Money said today it was seeing an improvement in the mortgage market. The UK's seventh largest mortgage lender said there were early signs that market activity had improved in January, increasing back to 2019 levels. David Duffy, the chief executive, added, "We are encouraged by both our customers' resilience and improving sentiment in the mortgage market as interest rates have peaked." Well, the bank was reporting customer lending of £72.8 billion for the final 3 months of 2023. That was in line with the situation a year earlier. The shares are currently ahead by 1.5%. And shares of Renishaw have surged by nearly 19% this morning after the high-precision engineering and technology group signalled better times ahead. The Gloucestershire-based company, whose measurement and calibration instruments are used in a variety of sectors, including healthcare and manufacturing, was reporting a pre-tax profit of £56.5 million for the 6 months to the end of December. That was down 27% on the same period a year earlier. But it said it expected an improvement in its trading performance in the second half of the financial year as market conditions improved. Well, last night's declines on Wall Street were followed by a mixed session for equities overnight in the Asia-Pacific region. You can see the standouts on your screen there. Hong Kong up 4% and Shanghai up 3.25%, both propelled sharply higher as the authorities stepped in with interventions aimed at stemming recent declines. In Europe, there's been a bit of follow-through for that this morning. Only the DAX letting the side down in mainland Europe just now. Talking points today include UBS. Switzerland's biggest lender is off 2.5% after it flagged rising costs in its latest results, while the German chipmaker Infineon is down 3% in Frankfurt as it cut its full-year sales forecast. Well, here in London, the FTSE 100 is ahead by 0.2%, 33 points to the good. I can tell you that 17 of those have come from BP alone after its very strong results. Other leading gainers include stocks with heavy Chinese exposure. The Prudential currently up 2.5% and HSBC up 1.75%. To the downside, the gaming group Entain is off some 3%. That's on adverse broker comment. Outside the FTSE 100, Trustpilot is up another 3% as its share buyback continues, while the Scottish house builder Springfield Properties is up 4% on a new affordable housing contract. Over on the FX markets, well, the dollar remains close to 3-month highs, although sterling's regained a bit of ground against both it and the euro this morning. As for the oil price, well, that rallied last night from its recent lows. A barrel of Brent crude will currently set you back $78.52 a barrel. That's up 0.2%. Well, joining me this morning is Simon Lapthorne, Senior Research Analyst at Investec Wealth and Investment. Simon, good to see you this morning. All about BP today.
Yeah.
Were you surprised by the strength of the numbers?
Well, the profits numbers were a little bit ahead of the forecast, about 8% at the net profit level in the fourth quarter, about $3 billion compared with the consensus 2.8. So that's a useful contribution to driving the share price up. But I think it's really mostly about the cash. The scale of the buyback at 1.75 billion is ahead of what we're expecting, 1.25, maybe 1.5 billion, and indications that that will continue through the next year or 2 years. So they're going to return 80% of surplus cash flow to investors, up from 60%. So I think that's the big driver. And I think what investors like about this is BP trying to strike a balance between continuing to pursue its energy transition strategy. It's one of the more aggressive of the big oil companies internationally in pursuing the transition strategy, whilst keeping traditional oil-loving shareholders happy with attractive and increasingly attractive returns. And BP trades at a lower valuation than some of the US oil companies because some investors are less less enamoured of that clean energy transition strategy and prefer the focus on the knitting kind of approach. So treading the middle ground and doing so quite successfully. New CEO, first quarter for him, clearly signalling no change in that clean energy strategy, but plenty of cash for shareholders. So happy shareholders all round, I think, this morning.
Yeah, I mean, you can tell that he's a former CFO because the emphasis has been very much on the financials this morning. Was there any operational detail that...
No, the operational performance was a little bit mixed at the sectoral level. They did better in the traditional oil business and slightly less well than expected in gas and low carbon energy, which is around a third of the profit, so quite a meaningful chunk. But no, I didn't see anything significant there to concern investors.
You made the very good point that BP has lagged its peers in valuation terms because it's been pivoting more to the transition than particularly some of the US operators. We've seen a big jump in the share price today. Is it starting to narrow the gap in terms of valuations?
Oh, yes, it is. It's narrowing the gap a little bit, but it's still quite significant, I think. And I think, they appeal to investors with slightly different sets of priorities.
Now, overnight, we obviously had a bit of a sell-off on Wall Street, but it was a very, very interesting last week in Wall Street. Some of the big tech company results.
Yes. Well, I think the message from last week... So 5 of the Magnificent 7 reported last week. Tesla had been earlier. NVIDIA is, I think, on the 14th or 15th of this month. And I think what those results started to show is that, and it's been true for a while, but it started to crystallise more, is that it's a mistake, really, to lump them all together as if they're one. The Magnificent 7, there have been quite different experiences. And I think 7 companies in 4 different sectors, bear in mind, in classification terms. I thought what was interesting, particularly, was the divergence of performance and the reception they got of 2 of the companies that are probably most similar in that group, and that's Alphabet and Meta. Alphabet had a small miss on the revenue numbers. It doesn't guide, so we don't know what the guidance was. Meta, conversely, beat on the revenue numbers, beat on the profits numbers, and beat on the guidance, and the shares were up remarkably for a company of that size, 20%. So we're seeing slightly different fortunes, even between companies that are similar within that group, and certainly quite a big divergence with Tesla now quite a significant laggard, and NVIDIA still leading the pack, although Meta chasing hard behind.
Yeah, NVIDIA hit another new all-time high yesterday.
I think there was an upgrade somewhere, yeah.
Simon, got to leave it there.
Okay.
Good to see you today.
Thanks very much.
Thank you. Still to come here on Business Live. Can the advance in AI technology help with cybersecurity? Don't go away.
I will always remember the atmosphere at the Shanghai protests. It was an electric mix of excitement, fear, and defiance. It's hard to express just how incredibly unusual these scenes are in China. I'm Helen Ann Smith. I'm Sky's Asia correspondent, and I'm based here in Beijing.
A massive COVID wave is sweeping this city, but officially, almost no one has died.
We aim to be the best and most trusted place for news.
We found all the roads to one large cluster of facilities were blocked. Those we did reach were fearsome.
My biggest challenge is adequately telling the stories of the Chinese people, even when the authorities would prefer me not to.
By the rules, we are allowed to film in the streets. I can't tell if I'm moving it or it's moving me, but it's a very strange feeling. Those hills over there, that's Russia.
Is this military ready?
We are prepared to face every kind of challenge.
Slightly minutes, slightly better. Fly Emirates, fly better. Thank you.
Welcome back. Royal Mail, The Guardian, Caesars Entertainment and the US Federal Aviation Administration were all high-profile victims last year of cyber attacks. But while cyber attacks are still on the increase, there are hopes that the advance of AI may be able to tilt things back in favour of those trying to ward them off. Well, joining me now from Amsterdam is Jitu Patel. He's Cisco's Executive Vice President and General Manager of Security and Collaboration. Jitu, morning to you. And why is this? What is AI doing to improve the capability of detecting attacks?
Thank you for having me on the show, by the way. And we are so excited about the possibilities for the first time, I'd say, in 30 years, where over the course of the past 30 years, the advantage has always been in the side of the adversary, because they have to be right once, whereas you as a defender have to be right every single time. I think this is the first time that you're starting to see that because of the use of AI, you'll actually be able to have the scales tip in favor of the defender. We're not quite there yet, but that's you can see a light at the end of the tunnel. And the way that you'll be able to do it is basically increase the efficacy of AI while also making sure that you improve the experience dramatically for both the users who are using these systems to keep themselves secure, as well as the administrators who are making sure that they're managing the systems. We'll be able to dramatically simplify the world for them.
And how rapidly can this capability be incorporated into defence systems?
You know, we're actually starting to do it right now, and a lot of these capabilities are available in the product today. We announced a couple of them, a few additional capabilities today, but we have a Cisco AI assistant that now actually allows you to go out and set complex policies, manage your hygiene for cybersecurity, all from within a natural language interface that directly kind of communicates with your security systems. And you can continue to expect more and more of these kind of innovations happen in a very, very compressed speed. I think the rate of scientific progress in general will probably compound at 1,000x over the course of the next few years. And so it's going to be at a very rapid pace. I think it's going to get harder and harder to predict, 2 years out, 3 years out, because the compression of the cycle of innovation that you'll see.
I mean, all of this sounds very, very encouraging, but what happens when the cyber security attackers themselves start to incorporate AI into what they do?
Yeah, that's, so the thing that's going to happen is you'll have the attacks get more sophisticated, and you'll get the defenses also get more sophisticated. So if you think about the attacks, 80% of breaches that happen start with email, and you have a spam from a prince from an exotic country that says, click on this email and you can download your $10 million. Your attacks moving forward are going to be far more bespoke, far more personalized, where it's going to be harder to distinguish between legitimate activity and a malicious attack. So there will be a level of sophistication increase that happens on that front. But the reason I believe that there's going to be more of a scale tipped in the favor of the defender is because of the data advantage. Because you'll actually have much more data to predict better what's going to happen and be able to intercept that and correlate data across multiple different data points in a far better way than we've been able to do in the past.
OK, G2, appreciate you joining me today. It's good to see you. Thank you, sir. That's it from me for the time being. I'll be back at 4:30 this afternoon. We're going to break away now and go and hear what the former Prime